Hello everyone. I hope all of you are doing great today. This is Ahmed with the day 4 of the ACCA's Practice to Pass uh, session and the Practice to Pass webinar. And this is going to be the last day. So I really hope so that we will end up on a very high note. And let's start the proceedings. I really hope so that all of you have completed the homework which was assigned to you between the session number 3 and the session number 4. Can I have some kind of confirmation that did you finish off your homework? What was the homework? There were 2 questions which we did yesterday. Those 2 questions relevant to the completion, review and reporting. Now I hope you remember that completion, review and reporting will be, you will be able to score 25 marks out of the 100 marks from this topic called completion, review and reporting. So we did 2 questions yesterday, both 25 marks each. So can I have confirmation that you did prepare? When I say prepare, I really mean, literally mean the word prepare according to my definition. Did you prepare those 2 questions or at least 1 question according to the technique? So far Ayaz has prepared it. Anyone else? Okay, we'll talk about it later as well, that whether you prepared those questions or not, because as of now I'm not getting good enough responses from your side, unlike the normal case. Normally you guys do respond a lot. So as of now, Zishan, Ayaz, so not much to offer. Anyways, so let's start the proceedings. And let's start the proceedings with this. We are going to skip all that. We know there are 2 sections, section A, section B. One of the question in the section B will be about completion, review and reporting, which we discussed, tackled, we explored it on the day 3 of the webinar. So anyone out there who has missed the day 3, today's class has got nothing to do with day 3. You can watch the day 3 on YouTube, and as a result of that, your 25 marks could be secured. Okay, what about the course content? If you remember, I told you that the day 1 was about planning and conducting the audit of historical financial information. Basically, the day 1 was about the risk of material misstatement, the business risk, and the professional marks. The day 2 was about professional and ethical considerations, along with quality control and practice management. Day 3 was all about completion, review, and reporting. Now we are, right at the start of the day 4, which is the last day. And today we will be exploring other assignments or audit related services. Yes, the pass rate of AAA is very, very poor, but we can bounce back. We have to be optimistic and aggressive. These are the 2 words you need to carry in your mind, in your body language, up to the point of Monday, 6 June 2022. 2 words: optimistic and aggressive. What do I mean by being optimistic and aggressive? Being optimistic means you have to remind yourself on a daily basis that if I am going to prepare 1 complete mock, 1 complete paper, 2, 3 questions, if I'm going to prepare 1, 2, 3 questions on a daily basis, I will be able to get at least 50 marks or maybe beyond that. If I will end up getting 60, 70, 80, I don't mind, but at least I'll get 50. That's being optimistic. And what do I mean by being aggressive? Being aggressive means that you should not waste even a single day. Every day you have to be aggressive. You have to be honest with yourself. It's all about your future. It's not about your parents' future. It's not about your spouse's future. It's about your future. You have to decide whether you want to make it on Monday, 6 June 2022 or not. If you really want to make it, you have to stay aggressive. And when I say aggressive, you have to work hard without being over ambitious, without having extraordinary pressures on yourself. Just stay focused, follow the rituals, follow the questions. Okay, why students fail this exam so much? And I list down quite a few reasons, but along with that, I also told you how to counter those reasons. So the first possible reason why students fail this exam so much is the poor typing speed. Many of you will encounter the failure students. Okay, fine, normal, they failed. Okay, fine. The real problem is they are not trying to identify, or they are unable to identify why they are failing. So students normally fail because they do not end up completing the whole exam in the given time. You could counter that. You could end up not being there. You could end up being completing the whole paper in the given time. How is that possible? It is possible if you are going to work on your typing speed, if you are going to solve each and every question from tonight onwards on the ACCA's practice platform. Your typing speed will improve, your familiarity level with the practice platform will improve. You'll feel like home on Monday 6 June 2022, and as a result you will be able to finish off the exam. Many students fail because they are not aware of the marking scheme. So for a 1.5 marker point, they are writing 6, 7, 8 lines. There's no point. You could have squeezed it into 3 lines and you could have still managed to score 1.5 marks. So you need to know the marking scheme. If you attended the day one, I think you should have realized that for 8 marks business risk part, we only required 4 business risk. So what's the point of writing 5, 6 or 7 business risk? Yes, the solution had 8 business risk, but we need to follow the marking scheme. That's the second reason why AAA has got such a high failure rate. This is not a problem in AA. This is not a problem in PM exam. This is not a problem in tax exam, but this is a real hardcore problem in AAA. So we need to learn and we need to remind ourselves about the marking scheme on a daily basis. We should stop idealizing the ideal answers. If you are going to look at an ideal answer, if you are going to have a look at the past paper answer, your feet will start shaking. You will feel demoralized, upset. You will start underrating yourself. You will have a feeling that I can never replicate that answer. You are absolutely right, you will not be able to replicate that answer, but the important thing is you don't have to replicate that. You have to extract an attainable answer out of it. So what do I mean by attainable answer? I think for that we have already invested especially day one and even day two, day three. We have been trying to get an attainable answer out of that ideal answer, which we can actually replicate in the final exam. Do not ignore your B and F. Now, what's BF? Well, it could be best friend, but for now, BF stands for professional and ethical considerations. Normally students ignore professional and ethical consideration because they incorrectly believe that they are already prepared for that because of their AA, which is completely not the case. When it comes to AAA, professional and ethical considerations are very deep, very deep. And do not ignore F. What's F? F is your other assignments, which is the agenda for the day. There are 5, 6 other assignments or audit related assignments. So it's a very deep topic, and normally at the end of the syllabus, at the end of the session, at the end of month May, at the end of month August, or for that matter at the end of month November, when the exams are around the corner, students tend to realize they are running out of time, so they ignore this particular topic called other assignments and they tend to focus on other syllabus areas, and as a result they lose some very valuable marks, minimum 15 marks. So you should not ignore VNF. You need to attempt 2 mock exams. So many of you are contacting me that, okay, I failed this exam 1 time, 2 time, I need to make sure I pass this exam. My friend failed it 3 times. This is my first attempt. What should I do? Well, my dear, you got to attempt the mock exam. If you are going to attempt the mock exam in strict exam conditions and then you will get it marked by an expert tutor, I think your chances of passing this exam will shoot up, skyrocket. If you will end up scoring 40 out of 100 in final exam by attempting 2 mock exams, you will not jump to 50, rather you will jump from 40 to 60. Mark my words. The mock exam is going to be a real game changer. So you got to decide for yourself whether you are so honest with yourself or not. Last but not the least, I always encourage students to type and type. What was our plan? We covered risk on the day one. We covered professional and ethical considerations along with a very tricky topic, quality control, on day two. We did completion review and reporting on day three. Now we are heading towards other assignment, which is the agenda for the day 4. Okay, I've been telling you all this thing. What should be your plan of action after the webinar? I think your plan of action should be very simple and straightforward. Step number 1, you should watch all the 4 days of webinar. You should solve each and every question. You should rather prepare each and every question which we discussed directly or indirectly during the webinars. Once you are absolutely done with the webinars, you should focus on 8 most recent past papers right now, which are listed right now in front of your screen. Then what? You should also go through their examiner's report. And when I say prepare, you got to type them, you got to learn them, you got to make some your own notes, you got to read 5 technical articles which I'll be sharing tomorrow in the WhatsApp group. You got to master your professional marks on a daily basis. You got to plan your mock exams. You got to plan the dates. Maybe it could be 30th of May and 2nd of June. And last but not the least, on a daily basis, you got to type for 5-6 hours, so that on the final exam day you could type for 3 hours 15 minutes. So it's a very simple plan. If you still have got any queries or any confusion, you are more than welcome to contact me on my WhatsApp number. You will be added in the WhatsApp group, no worries. You will be provided with all the study materials, no worries. So let's focus on rather bigger things. Okay. So I raised a question earlier and I'm raising this question all over again. Did you guys prepared the 2 questions which we did yesterday regarding the completion review and reporting? Did you guys prepare those 2 questions in between yesterday's webinar and the tonight's webinar? Did you guys prepare those? Okay, Umar prepared 1 at least. Something is better than nothing. Okay, Ayaz has prepared, so has Zishan. Umer, I'm sorry, Umer al Momin, well done, very well done. Ans, very well done. Taruna, it's not enough to read it. I know you might be busy in your job or workload. You got to prepare. If you have read them out, if your concepts are clear, you might be able to clear the interview. But we need to get at least 50 marks in the final exam. For that, we need to work harder and we need to prepare. So I hope you will prepare tomorrow. Okay, Taruna, well done, well done. Okay, Manoj, the weekend is around the corner. You have to pull up your socks and you need to apply for the leaves as well. Okay, Phillips, I prepared the 2 previous assignment, but not the 3rd one. Sorry about that. No problems. Just make sure before moving on to the master plan, the whole set of webinar is, crystal clear, well prepared. Okay, this is it for now. Okay, before we start today's proceedings, I just want all of you to realize that yes, I do remember that I need to let you know about the marking scheme relevant to the audit risk question, especially that analytical procedure question. Don't worry, we'll explore that at the end. So I do remember that. Okay, Hafsa, no worries. The recording of the day 1 and day 2 is already available on YouTube. The day 3 will be available shortly as well. So after attending today's session, which has got nothing to do with the first 3 days, go on to the day 1. Go on to the day 1. In fact, I will reshare the link for the day 1 in the WhatsApp group. No worries. Okay, let's start the day. And let's start the day with this topic called audit related services. Okay, then what are audit related services? Before we start this topic, I want all of you to realize definitely this is the most underprepared topic all around the globe. You have to trust me on that. I personally know students who have attempted AAA twice, maybe thrice, and they never ever prepared audit related services. They failed it twice, they failed it thrice, but they were never able to prepare audit related services. Whenever they used to fail, they used to start their preparation from the same old pattern, audit risk. They used to prepare completion, review, and reporting. They used to try. They used to, try and prepare ethical and professional issues. By the time the session was over, and they used to focus on those factors: risk, completion, ethics, and they used to miss out 15, 20 marks of their final exam. So this audit related services, whenever they are tested in the exam, when you are going to read those 8 examiners report, because you need to prepare those 8 past papers, you will realize that according to the examiner, according to the examiner's comment, consistently the examiner is highlighting the fact that audit related services remains to be a very poorly answered question all over the world. So let's not commit that mistake. Let's not have an attribute of a failure student. Let's give a decent time to the audit related services. And I'm trying to, invest decent time to the audit related services. And as a result, out of the 4 days we have, one complete day I've allocated to this most underprepared and I would say underrated topic called an audit related services. If somebody is absolutely well prepared for audit related services, mark my words, he or she is not going to fail. This is my personal belief. Why I'm so confident about it? Because if somebody, whether it's Ayaz, Manoj, Phillips, anyone out there, if you are absolutely well prepared, Taruna, with respect to audit related services, I don't believe that you are not well prepared for risk completion, review, and reporting. So if somebody is damn good in this topic, that individual will be automatically damn good in other topics as well, such as risk, completion, review, and reporting. So this is one area. If you are going to prepare it, if you are going to invest 4 to 5 days on it, if you are going to invest 3 hours per day on this topic called audit related services for the next 5 to 6 days, automatically, mark my words, you will pass this paper. I personally know a student, a very, very close student. He failed AAA for like 4 to 5 times. And every time he was not prepared for this topic called audit related services. And even ethical and professional issues used to be a weak area. Every time he used to come back after the exam and he used to tell me, I attempted 70-mark exam. I used to ask, why not 30? He used to say, I was running out of time and those questions were not, my favorite areas. So I tried to invest quality, 70 marks, 75, 76, 70, never crossed 80. And he used to score 47, 46, 48, 45, never 50, obviously, and never below 40. Then finally, in one fine attempt, at least 1 year ago or 1.5 years ago, he prepared audit related services. And as a result, he was able to attempt more than 90 marks paper. And he ended up scoring, he passed the exam. So even right now in the question section, I can see that I'm not using the names. I can see that you guys are, you are absolutely right. There are students who are, sharing their experiences that they have failed it on numerous occasions, and they are saying that they have always scored among their score is always in between 40, 45, 47, and they have never attempted audit related services in their final exam. Now, I think this particular moment is the most important moment of the 4 days of webinars, if you could learn a thing out of it. So this is it from my side. Before we start the audit related services, Amir, Muawiya, you will get the link for the WhatsApp group. Otherwise, first of all, you'll get it in the answer section. Otherwise, you will contact me and I will send you the invitation. No worries. Focus on the lecture as of now. Thank you. Don't worry. Okay, I'm too excited to start this topic called audit related services. Okay, before we move on, what do I mean by audit related services? Services provided by an audit firm, but not exactly a typical audit, but relevant to the audit. So typical techniques such as planning, risk assessment, procedures, review, reporting, in fact, consideration before accepting a new client, all those will be applicable, but they are not a typical statutory external audit of a company. That's why this topic is called audit related services. So all of you out there who have failed, unfortunately, AAA so many times, I just want you to realize that you know this topic, guys. This is not unusual. This is not new. You know what's planning. You know there are certain factors which you need to consider before accepting a client. You already know what are procedures. You already know what is assurance, what are procedures. So what's the big deal in it? Let's start this topic. Okay. There will often be one question in the exam, and I'm telling you, it's more than often. It's getting very regular now. So there will be often one question in the exam that will test your ability to apply your knowledge. Which knowledge? Which you have already gained. You know that. Don't worry, don't panic. I told you earlier, stay optimistic. So you have to exam question will test your ability to apply your knowledge to what? To a non-audit engagement. What's non-audit engagement? Anything not a typical audit of a, not a typical audit of the financial statements, but something relevant to it. The question could cover any area of the engagement process. What kind of an area? Such as what factors you need to consider before accepting a client for the review of interim financial information. What factors you need to consider before accepting a client for the forensic audit. What factors you need to consider before accepting a client for the due diligence. Whatever I am saying right now, trust me, all this have been examined in the past paper questions. So it's not complicated. We need to plan. So if we are planning a forensic audit, a due diligence, a review of interim financial information, just like audit planning, we need to consider certain factors. We need to apply certain procedures, and then eventually we have to report. Reporting is the least tested area among all that. Mostly the examiner is going to test acceptance and procedures. Mostly the examiner is going to test acceptance and procedures, sometimes the planning part as well, but reporting is the least tested area because examiner is going to test reporting in the completion review and reporting in the traditional format. Okay. Okay, Javed, I'll get back to you on this. We can talk about it. Okay. Uh, audit related service area is scary for most of us because they don't have a set pattern of answers like audit. Noor Khan, hold on. We have got 2.5 hours up in our sleeves. At the end of the today's session, I will specifically ask you at the end around 11:15, 11:20 p.m., 11 o'clock, that are you getting on the right track? I'll try my best to help you out. I will try to come up with an easy strategy. Hafsa, you'll get everything. You have to join the WhatsApp group. Don't worry. Okay. Now let's go back to audit related services. Audit related services are those services that professional accountants offer. I told you KPMG offers that, EY offers that, Deloitte offers that. Well, we can establish an audit firm and we can offer all those services. But what are audit related services? They are not statutory audits. So they are anything other than statutory audits. But the good news is they are conceptually related to audit, and they use what kind of skills? The similar skills. So easy, calm down. We already know that. It's relevant to us. And assurance engagement. Now, audit related services could be broken down into two types. Number one, assurance related services could be further broken down into two types. Number one, am I clear? My voice and my video is clear. Is it clear? Can I have a quick confirmation? My voice and my video. Okay, clear. Okay. Okay. Now, audit related services are of two types. There are two types. Number one, an assurance engagement, and we all know what is meant by assurance. Number second is called agreed upon procedures. So there are two types. Assurance engagement is an engagement in which a practitioner will obtain sufficient appropriate audit evidence, sufficient appropriate evidence in order to express a conclusion designed to enhance a degree of confidence. The bottom line is, in an assurance engagement, at the end of the day, you have to express an opinion. And considering the fact this is not a typical standard practice, we have to express our opinion. So we have to express our opinion in a very give me a second. Okay, it's fine now. I have plugged in the cable. Okay, am I clear now? What do you the audio and the video is clear? Is this clear, yeah? Is it clear now? No video. Give me a second. Voice is fine now, but the video is not clear. Well, unfortunately, if that is the case, we can continue without the video, but do let me know. Okay, I'll try it after a while. Don't worry. I'll try. Okay. 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 So I was telling you that these audit related services can be broken down into two types. Number one, an assurance engagement where an auditor has to express an opinion. Number two, an agreed upon procedures. Now, what do I mean by agreed upon procedures? Agreed upon procedure means that the client will tell you that they need findings on certain things. So you will only apply procedures in order to confirm, in order to verify whatever they are looking for. So agreed upon procedures require the accountant to report on the factual findings based upon the procedures agreed with the client. So the client has agreed that I need you to confirm this, I need you to confirm that, I need you to confirm this. So you will not come up with a conclusion at the end of the day. You will not express your opinion. You will only answer those questions. So this is what we call agreed procedures. So there are two types of audit related services. One where we are going to express an opinion. Two where we are not going to express an opinion. See what's there. Hence no assurance, no conclusion, or I would say no opinion is expressed. Rather we are only going to report on those areas which were specifically asked or raised by the client itself. Is this clear? The two types of audit related services? Okay. Can I again have a confirmation, because it's bothering me? Am I clear? Can you see the video now? Okay, give me a second then. Give me a Sorry for the inconvenience. Now, please, can you confirm, am I absolutely crystal clear with respect to both audio and video? Thank you very much. I'm loving it. McDonald's. Okay. Thank you. Thank you. That's great. Okay. So I was telling you there are two different types of audit related services. A, where the practitioner, where the audit firm, where the firm of accountants will express an opinion, but they will not express an opinion with the reasonable assurance. Rather, they will express an opinion with a moderate level of assurance. We call it limited assurance or negative assurance, negatively worded opinion. And the second type of audit related service is called agreed upon procedures, where we will only report our findings according to the client's requirement. We are not going to express an opinion. Are you clear with respect to these two things, so that I can move on? It's important for me to know, are you clear what are audit related services and what are two different types of audit related services? It's the base. We are building the foundation. We are going towards something big. It's important to understand the foundation of this audit related service topic. I'm not directly jumping into any particular topic. I'm trying to slowly build the momentum. Okay, that's great. Thank you. Akhil, your question is purely out of context. Please do raise this question after some time. Sorry, I can't answer it right now. Okay, just a quick repetition of whatever we have started so far. We have started a topic called audit related services. This is going to be for 15 to 20 marks in your final exam. Audit related service are 90% just like the audit. All those things, planning, acceptance, consideration, reporting, procedures, but they are different to statutory audit. Now, audit related services could be further divided into two categories. Number one, where the audit firm will provide assurance. And number second, where the audit firm will not provide assurance. When I say the audit firm will provide assurance, it means the auditor will express an opinion, the conclusion, the limited assurance opinion. But where the auditor will not provide assurance or will not provide the opinion, we call it agreed upon procedures. So assurance engagement is the type number one of the audit related service, and the agreed upon procedures is the type number two of the audit related services. Agreed upon procedure means we will only work in accordance with the instructions or the guidelines or the requirement of the client. So the client has asked me about certain things, I will work on them and I'll answer. I will not conclude, I will not come up with my opinion. Okay, if you are clear up to this point, let's see what are the different types of assurance engagements and what are the different types of agreed upon procedures. Assurance engagements, which is the type number one of audit related services, or we call it non-audit engagements, include. The number one non-audit engagement is called review of interim financial statements. It's been a while that this particular thing has not been tested in AAA. What do I mean by review of interim financial statements? You all know there are certain companies which are exempt from audit. So that company may be small in size. They might go for a review of interim financial statements, or maybe a company is too big and they would like to divide their audit work. So they will ask, maybe they will ask their existing auditor to review their interim financial statements. That particular engagement, that particular assignment is not your typical audit, but it is relevant to audit, and it's called first non-audit engagement, and the name of that is called review of interim financial statements. Review is, you can imagine, it's a baby version of the audit. Second assurance related or assurance engagement, it's called due diligence. Due diligence means that if I have to purchase company X, I would like to get an expert opinion from you. Maybe you are my external auditor, maybe you are not my external auditor. I will ask you that I'm looking forward to purchase company X. Could you help me? Well, help me in what? Could you help me in trying to figure out which price is appropriate, what time is appropriate? So will I be able to create the synergies I'm looking forward to? that particular assignment where you will help me out in figuring out, in concluding and evaluating whether that particular purchase is appropriate for me or not, that particular acquisition is good enough for me or not. That particular assignment is called due diligence assignment. Number third assurance engagement is called examination of prospective financial information. In the last attempt, the examiner has tested this one. Examination of prospective financial information means a client has prepared financial information, but a forward-looking one, prospective, forecasted cash flow statements, forecasted financial statements, and you as an auditor has to, perform certain procedures, and you need to express an opinion, and that opinion will be a limited assurance opinion. That's why it's called assurance engagement, because you are supposed to express an opinion on that prospective financial information. Maybe that prospective financial information has got to do with certain loans, confirmation of the company's going concern or anything like that. Then a company may have published or produced social and environmental information, and you need to review that social and environmental information in order to confirm whether the client is whatever they are sharing, it's appropriate or not. So the fourth assignment has got to do with social and environmental information. The fifth possible assignment is called forensic audit, but the forensic audit is not an assurance engagement, rather it is an agreed upon procedure. So forensic audit is a special kind of an audit. It's about investigation, it's about quantifying the fraudster, it's about quantifying the loss. So for when you will be hired as a forensic auditor, you will only apply those procedures, or you will only work in those areas where the client has asked you to. So forensic auditing is a agreed upon procedure assignment where you will work according to the instructions or the requirement of the client, and you will only answer those questions which were initially raised by the client, and you will not come up with a conclusion, and you will not express an opinion. Forensic audit could be in the form of a fraud investigation. Forensic audit could be in the form of verifying an insurance claim. Now again, due diligence. Due diligence is one of the most important audit related service. Why is that? Because due diligence could be in the form of assurance engagement where you have to express an opinion, or due diligence could be in the form of agreed upon procedures where you don't have to express an opinion, rather you have to answer those questions which were raised by the client. So due diligence has got both attributes. It could be in the form of assurance, it could be in the form of assurance engagement, it could be in the form of agreed upon procedures. There is one more audit, non-audit or audit related service, which is the audit of performance information, that we'll explore at the end. So there are overall 6 topics under this umbrella. Yes, clearly there is a difference between audit and related services. In audit, we tend to go for reasonable assurance, but not an absolute assurance. When it comes to review, we go for limited assurance. When it comes to agreed upon procedures, we go towards no assurance at all. Rather, we only answer those questions which were raised by the client. In the audit, we come up with positively worded opinion. When it comes to review, we come up with negative assurance or negatively worded opinion. And when it comes to agreed upon procedures, it's a fact-finding exercise. Well, you all know the difference between the different types of assurances, the level of work. Audit is required according to law in many countries. Those audit related services are usually not required by any law. So that was a background about the audit related services. That was some kind of a differentiation between the audit and audit related services. That was a brief introduction of overall the different topics of audit related services. Is this clear? Okay, Farah has asked a question, what is limited review? We'll explore that in a short while. Farah, hold on. Mohammed Ayaz, what is the limited opinion? Limited assurance, not limited opinion. In limited assurance, or in a negatively worded opinion, will express a very moderate level of assurance. In the audit, we end up having high level of assurance, which is called reasonable assurance. We cannot provide guarantees, so there is no absolute assurance. Absolute assurance does not exist. When it comes to statutory audit, we provide reasonable assurance. And when it comes to an assignment such as review, we provide limited assurance. When I say limited assurance, we only work on analytical procedures and inquiries. We do not go into much details. Can detection of fraud lead to change in audit opinion? Yes. Well, if there is a fraud going on, and if the management has correctly reflected it, they have de-recognized the assets, the underlying asset, or they have charged expense, then I don't think so it will have an impact on opinion. Maybe I would like to report it to those charged with governance. That's a separate story. Okay, let's start. We have got overall 6 topics. Let's start the first topic, which is called the review of interim financial information. Review of interim financial information. So in many countries, the listed companies are required to publish a half-yearly interim report containing a summarized statement of profit or loss for the first 6 months of the financial year, as well as certain statement of financial position. So there are certain countries where at the end of the first 6 months, you need to publish the profit or loss account and an extract of the statement of financial position. Now that company can choose to get it audit, but not the typical audit. So that company will have what? They will go for a review of that financial information. So we call it review of the interim financial information. Okay. Give me a second. Okay. So that company could go for review of interim financial information. Okay. Now, what is the objective of a review of interim financial information? The objective of this assignment is to express an opinion whether that interim financial information is prepared in all material respects in accordance with the applicable financial reporting framework. Please keep it in mind, the applicable financial reporting framework would be the same which is applicable to the year-end financial statements. Now, the first topic. Every audit related service will have the same pattern. For every audit related service, you have to consider the acceptance considerations. Now, the first acceptance consideration, or the first thing is, in order to express a conclusion on the interim financial information, the assurance provider will require a good understanding of the company. So before you accept a client, you need to make sure that you understand that particular client. Who is in the best position to provide the review of the interim financial information? I think it's going to be the external auditor, because external auditor is usually having the greatest understanding of the entity. So they are in the best position to provide the review of the interim financial information. Now, please keep that thing in mind. If company X has approached KPMG for the review of interim financial information and KPMG is not the external auditor of that company, KPMG should evaluate why they have not contacted their existing auditor. Therefore, if the company approaches a different firm to provide the service, the audit firm should consider the reasons behind it, why they are not contacting their existing auditor. Because existing auditor is in the best position to perform the review of the interim financial information, because they are the one who has to perform the audit. The engagement is likely to be a recurring engagement. Therefore, engagement fee will need to be considered when assessing the fee dependency. There is a possibility that external auditor is not accepting this particular assignment, because that could create extraordinary fee for them. The overall fee level would be significant, and that could lead to self-interest threat. So before accepting a client with respect to review of interim financial information, you need to consider this particular issue. But along with that, the typical acceptance consideration, which are covered in the chapter number 6 of the book, you should be familiar with all that. What are those factors? Triple P, triple R, IMMF. It's a mnemonic which I always use. Preconditions, professional competence and due care, risk, integrity of the management, risk, resources, money laundering, fee. So you need to consider all those factors. But along with that, you need to consider why they are not contacting their existing auditor, if that is the case. So this is what we call acceptance consideration for a review engagement. Now, Once you are planning and performing a review engagement, you need to make sure you are complying with the ethical requirements. You need to make sure you are not compromising on the quality. You need to make sure that you have got the necessary competence and resources available to do that, and you need to maintain your professional skepticism. So these are the principles which you need to apply when you are planning and performing a review engagement. Last but not the least, we are done with this topic. Trust me, we are done with this topic. Last but not the least, what kind of procedures you are going to apply if you are performing a review of the interim financial information. So if you are performing a review of the interim financial information, what kind of procedures you will apply? I think you are going to apply two types of procedures. A, you will focus on inquiries with the management. B, you will heavily rely on analytical procedures. So these are the two procedures which you are going to apply when you are performing a review of the interim financial information. Other review procedures to obtain sufficient appropriate evidence could be: you have to apply analytical procedures. What are analytical procedures? You will compare the current year interim financial information maybe with the prior period. You will compare the current financial statements with the forecast, maybe with the budget. You will review any possible relationship which could create doubt in your mind, such as you will look for the gross profit margins, you will look for the net profit margin, maybe you will look for the receivable collection period, maybe for the sake of inventory maybe overstated, you will look for the inventory holding period. So you will mainly focus on analytical procedures and inquiries. There are certain procedures available for your understanding. You can go and have a look at those procedures. So this is it. Let me recap this topic. The first topic, which is audit related service, is called review of interim financial information. The first subtopic in this topic is called acceptance consideration. Before accepting a client for the sake of review of interim financial information, you need to make sure you have got the greatest understanding of that client. If you are not the existing external auditor of that company, you need to consider why they have not approached their external auditor. Why you? Why not them? Maybe there is a ethical issue such as fee dependency, self-interest threat. So you need to consider why they are not approaching their external auditor. If they are approaching you and you are the external auditor, you need to make sure that does not create self-interest threat for you. Other acceptance considerations are also applicable, such as triple P, triple R, IMMF, which are available in the study text chapter number 6. Then you have to apply procedures. And when you are applying procedures, you have to focus on two things. Number one, analytical procedures and inquiries with the management. Once you are applying or once you are performing and planning any review engagement, you need to comply with your ethical requirements. You need to apply your quality control procedures. You need to make sure you have got the competence and resources available. Last but not the least, you should not let go your professional skepticism. This is it. We are done with the first topic, believe it or not. Any questions relevant to this? Okay, let's start the questions. Farah, are you clear now? What is limited review? Are you clear? Mohammad Ayaz, what is it? Why is it a limited opinion? What's the difference between limited opinion and other opinion? Ayaz, it's a limited opinion because we are not working in that depth. We are only relying on two things: inquiries and analytical procedures. It's not an audit. Client is not going to pay me that great fee. It's not a statutory audit. The public is not that much interested. The client is not that interested. It's a voluntary assignment. So I am going to work in accordance with the fee. I'm going to work in accordance with the expectations. I'm not going to work in that great depth. My sample size will be reduced. I will only focus on, a limited data, limited work. Are you clear, Ayaz? What is the difference between reasonable assurance and limited assurance? Is non-assurance more risky, Nashir? No, not really. Not really, because the stakeholders are not, that much. They are not that much bothered. So it's not the case. It's not the risky thing is audit. Always the audit. No need to calculate ratios. Why not? You might need to calculate ratios in analytical procedures. All about comparisons. The comparisons could be financial with non-financial, ratios, trends, percentage increase, receivable collection period. Omar, are you clear now? You might need to calculate ratios when you are performing a review of the entire financial information. Should we set preliminary materiality? Well, we would. If we are the auditors, if we are their auditors, what matters need to consider after self-interest. If you have been assigned for a review of interim financial information and you are also the external auditor of that particular company, things will become a lot easier for you because you already know that client. Your understanding is already great. You already know the financial reporting framework. You already know their accounting policies and principles. Because when it comes to interim financial information and when it comes to year-end financial statement, there has to be a consistency. So the external auditor is in the ideal position to perform that activity. So you only have to consider your ethical stance. Otherwise, Siddiqui, you are in an absolute position to perform that. Is this clear? Ans has got a question. Does this create self-interest threat at the final audit? It does not create self-interest threat at the final audit. It will create self-interest threat because of the fee dependency, because there is a possibility along with the review of interim financial information and along with the year-end audit, the fee could be large. Are you clear, Anas? I asked conflict of interest. Don't use this terminology everywhere. Conflict of interest is a very typical terminology when it comes to AAA, and you should only apply where there are two clients, both related to same industry or direct competitors. So there is no conflict of interest. Farah, a very good question from Farah. Will this create a self-review threat? No, Farah, because you are not preparing financial statements. What is the definition of self-review threat? You prepared financial statements and then you are auditing it. That's the definition of self-review. But you are not preparing any financial statements. Okay, Farah, how does that sound? Asad is saying audio is not clear. Is it clear? Okay, sir, could you elaborate? It's not about BBB, it's about triple P, triple R, IMMF. Well, Akhil, I will share my personal notes on triple P, triple R, IMMF in the WhatsApp group. If even then, open up your study text, check out the chapter number 6. Over there is a topic called what factors you need to consider before accepting a client, whether it's an audit client or a non-audit client. You need to get professional clearance. You need to check your professional competence. You need to evaluate preconditions for an audit. You need to check your resources. You need to check the integrity of the management. You need to check money laundering. It's called client due diligence. Is this clear? Is this clear, Akhil? Akhil, is this clear? And everyone with the triple P, triple R, IMMF, you need to check the fee level. F stands for fee. Okay, Umar, I'll check it out. I'll check it out and I'll let you know. My answer, Umar, was in general, that in general, you need to calculate ratios and trends when it comes to practical life, when you are performing a review. But when it comes to AAA, you have to say that I will compare this with that, this with that. Is this clear, Umar? Fee dependency for the new external auditor or for the existing auditor? No, Akhil. If you are the external auditor of Ahmed company and now you are also performing the review of interim financial information for Ahmed company, you will be driving a huge fee from Ahmed company. So there is a possibility you might breach the benchmark of 15% of your total fee from one particular client. So that creates self-interest threat for you as an audit firm. Is this clear? Okay, Farah is clear. So is Taruna. That's great. No, Nashir, you are not following it up. There will not be any self-review thread, because I told earlier, according to the definition, self-review thread arises where Ahmed prepares the financial statements and then Ahmed audits it. When it comes to the review of interim financial information, I am not preparing financial information. I'm not preparing financial statements. So I'm not, when I'm going to audit it at the end of the day, it will not create self-review thread. So for example, we are external auditors of KFC and now going to do a review of engagement for a McDonald's. Is this scenario a conflict of? Yes, it would lead to conflict of interest. If you're an auditor of KFC and you have been approached by McDonald's for the sake of audit or for the sake of review of interim financial information, yes, that creates an ethical issue for you before accepting a client. This is what we call conflict of interest. Absolutely, yes. Oh, very well done. Please stop your questions as of for now. For now, sir, what if we are engaged in compilation engagement? Why are we engaged? Why are we going to compile? Why are we going to compile the interim financial information? You guys are not getting the point. I am not going to prepare the financial information, whether it is the year-end financial statements or the interim financial information. So this will not create self-review thread. Trust me on that. Can you? Amit, this is not going to create self-review thread. You are not going to compile. Okay. One last question for now before we move to the past paper question on that. Now hold. A very beautiful crafted comment from Mr. or Miss Noor. Self-review thread does not arise. Thank you very much. Why? Because rather, Noor is saying rather, it will help the auditor in understanding the client. Okay, Mr. Noor is saying self-review thread does not arise. It rather help us to have deep understanding. Yes, it will help me at the end of the day in performing the external audit. It will help me in performing the review of interim financial information because I am focused on one client. Review of interim financial information is a subset, a baby version of the year-end audit. So the things are going to be a lot easier for the audit firm. Is this clear? And it will not create self-review thread. That's great. Okay, Noor, thank you very much. Now, I would like to raise a past paper question in front of you. This question is from your exam kit. The name of this question is called Square, and we'll be, quick with that. Let's straight away jump into the exam requirement. We are not going to have discussion on part B because the part B is relevant to ethical issues and professional issues. Let's ignore that. What about part A? Explain the principal analytical procedures. The word analytical procedures. So I told you when it comes to the interim financial information, there are two types of procedures. Number one, inquiries with the management. Number two, analytical procedures. Now the question is specifically asking you for what? Analytical procedures. So you should not apply any inquiries. If you are going to apply inquiries, you will get no marks. Explain the principal analytical procedures that should be used by the audit firm, by the auditor, by the practitioner to gather evidence in a review of interim financial information. What would be the marking scheme? 7 marks, 7 procedures, happy ending. Part 2, assess the matters that should be considered in forming a conclusion on Square company's interim financial statements. What factors you are going to consider? Same old thing. We will consider the materiality. We will consider the underlying accounting rule or standard. We'll consider what could be the risk, what mistake could have been made by the client, and we'll consider if the accounting treatment is not correct by the client, what impact it could have on the audit report or audit opinion. So it's not extraordinary different from what we have already studied so far. We'll consider the materiality. We'll consider the relevant accounting rules. We'll consider the risk. What if the client has not made compliance with the standard? If it is material, it could lead to qualified opinion, all that stuff. So 6 marks. Assess the matters I hope we'll be able to figure out 2 matters in order to get 6 marks, because I know I'll be able to explore 3 marks out of 1 matter. Now, I just need a confirmation from you guys. Are you clear with the marking scheme? Fazila, it's not exactly IMA AOR, because I don't think so that uh, there is a disagreement, but more or less the same pattern will consider that issue, will consider the materiality. Yes, yes, it's clear. Great, fantastic. Yes, Noor, you are right. Okay, great. Let's read the question without wasting further more time. You are responsible for the audit of a company called Squire Company, and it's a listed company. You are completing the review of its interim financial statement. So you are responsible for the audit, and you are also involved in the review of interim financial statements. So same audit firm. You are completing the review of its interim financial statements for the 6 months ended 31st October 20x7. Squire Company is a car manufacturer, and historically they have offered a 3-year warranty on cars sold. Pretty normal, right? The financial statements for the year ended 30th April 20x7 included a warranty provision of 1.5 million recognized total assets of 27.5. So at the year end, they were having a warranty provision of 1.5 million and their total assets were 27.5. You are aware on 1st July 20x7, due to cost cutting measures, the company has stopped offering warranties on cars sold. What's the 6-month end period? 31st October. And when they stopped the warranty? On 1st July. So they stopped in 1st July, August, September, October. So among this 6-month period, in the 4 month they did not offer the warranties, but they did offer warranties in the first 2 months of this 6-month period. And those warranties which they offered before that period, they would be applicable and active now, because those warranties, those sales they made are still, the warranty period is still on. The say 3-year period have not lapsed. You are aware that on 1st July, like 4 months ago, due to cost cutting measure, the company stopped offering warranties. The interim financial statements for the 6 months ended 31st October do not recognize any warranty provision. The total assets as of 31st October 20x7 is 30 million. What did you get out of it? Well, let me explain what's the story. My client has been offering 3-year warranties on all the cars sold. In the recent past, like 4 months ago, they stopped the warranty. They stopped offering warranties. Okay, if they are going to stop offering warranty, I I agree that the year end warranty could go down, but I don't believe it that the year end warranty could be zero. I don't buy this. Why? Because in the period ended 6 months, there were 2 months where they did offer warranty. So what about the warranties relevant to those 2 months? There could be claims, and even those warranties which they sold prior to this period, there could be warranty claims. Those warranty claims are still on. Like, what about they sold a car 2 years ago, so the warranty period is still left for 1 year. So I don't think so that their idea of not recognizing any provision at all is appropriate. So you will discuss that issue, that what how are you going to answer this question. Definitely you are going to start with the calculation on materiality. If 1.5 was 1.5 million out of 27.5 million, you will check the materiality from the last period, and again you will check that it is going to be material for this year as well. And after having discussion on materiality, you will have a discussion on IS 37 provision. You will say, yes, there exists a present obligation because of the past event. What past event? You made those sales and the warranty is still on. That warranty period has not lapsed as yet. So you can't, you can't come up with zero warranty provisions out all of a sudden. So if the client is not willing to recognize those warranty provision, definitely considering or assuming it is material, it could lead to qualified opinion. Maybe the client is not willing to recognize a provision because they want to portray a better picture. They want to understate their liabilities. Are you clear with the answer of part 2? Management should not be recognized liability. Zishan, I'm not getting it. Management should recognize the provisions, right? Okay, Akhil, we will explore the marking scheme. If I won't be able to explore the marking scheme during tonight's session, I will explore the marking scheme in the WhatsApp group. Don't worry. But otherwise, today I need to explore the marking scheme of the risk question using analytical procedures. Now, what about part 1? Explain the principal analytical procedures. What analytical procedures you are going to perform. Your analytical procedures should not be restricted to that provision. You can compare this year's revenue with the last year. You can compare this year's revenue with the corresponding period's revenue. You can compare their financial information with the budgeted or forecasted period. You can even calculate their receivable collection period and certain other ratios in order to make sure there is a consistency. So this is how you can work on that. Okay, let's check it out. Part A focuses on the review of interim financial information. This is what? This is a limited assurance engagement. So you have to provide negative assurance. Okay, so that was something relevant from the chapter. In the part 1, you are asked for analytical procedures. In the part 2, you are required to consider matters in forming a conclusion. Even though this is not an audit engagement, the same approach can be taken as for an audit completion question. Is this clear? Are you happy now? So what about the part 1? You can compare the interim financial information with the anticipated results. You can compare the interim financial information with the preceding period's result, or maybe with the corresponding interim financial period's result. You can compare certain ratios and indicators with those of the entities in the same industry, some competitor. You can compare their disaggregated data, maybe their revenue on a car by car basis, maybe their revenue on a month by month basis. You can calculate the warranty provision and compare it with the with the sales. Make sure they have finally recognized the warranty provision after your instructions. So this is what you are going to apply for the part 1. For the part 2, you already know how you are going to deal this answer. First of all, you are going to understand that this is a review of interim financial information. You will apply the IS 37 provision. You will discuss the materiality. You will say it represents 5.5% of the assets, so it is material. You will also express that the interim financial information has to be in line with the year-end financial statement. Same IFRS should apply, same financial reporting standard should apply. So they need to follow the IS 37. So considering it is material, if they are not going to adjust it, if the amount remains unadjusted, it means that the interim financial statement contains a material departure from the applicable financial reporting framework, and this is going to create a modification on the auditor's opinion, and the auditor's opinion will be a qualified opinion, and in the basis for qualified opinion paragraph, you will express that you have got reservation on that. So based on our review, with the exception of this matter in the preceding paragraph, nothing has come to our attention. This is the negatively worded opinion. Nothing has come to our attention, but except for the matter above. So this is finally an audit engagement should consider whether it is possible to withdraw. Okay, let's ignore this sentence. You can ignore from this engagement if the client is not willing to make that adjustment, but ignore that. So is this clear? Will you be able to? No, not a contingent liability. The client should not disclose the contingent liability. They should recognize the provision, Umar. Yes, IS 37 provision. Is this clear? Can I have some kind of confirmation? Now, will you be able to prepare this particular topic from your study text? And will you be able to prepare this question called Square on the review of interim financial information? The audit report will be same, Anas, except for the fact that you will say nothing has come to our attention. That's what we call negatively worded opinion. I'm not going into details of this because this is the basic stuff from the chapter number 1 of the AA. Is this clear? Is this clear, Anas? What is the marking scheme? 1 mark, 1 procedure. And for the part 2, there are marks available for materiality. There are mark available for the discussion on discussion of the accounting standard. There is a mark available on the discussion if the client is unwilling to adjust the financial statement. You will come up with a qualified opinion. So there are marks for every point. If you are doing the interim audit and there is a qualified opinion, if you are not their external auditor, do we need to communicate to external auditor if this was mistake coming from previous years? Well, we can have discussion, or external auditor can have discussion with us. You are right. External auditor can contact us. We are not supposed to contact the external auditor. The external auditor can contact us. Okay, I'm done with the first topic. Now, should we go to the second topic? Can I have yes? Should we go to the next topic? Because there are many topics. I want to cover as much as I can. Okay then. Okay. No. We can't have break right now. We can't have break. Let's cover one more topic, Noor, and then we could have a break. One more topic. Okay, one more topic, then we could have a break. Don't worry. Second topic of the day, and the second topic of the day is called due diligence. And I don't know why, but it is one of my personal favorite topic, and it is one of the most tricky topic as well. And it is very important and very tricky because due diligence could be tested in the form of an assurance engagement. Obviously, limited assurance, not a reasonable, because reasonable is only for external audits. And due diligence could be tested in the form of agreed upon procedures. Is this clear? That due diligence is an all-rounder. Due diligence can bat, due diligence can ball. Is this clear? So let's explore due diligence. What is due diligence? First of all, the basic definition. Never ever jump into this past paper question of any audit related service. This is a mistake which many students commit. Don't go into the question directly. Let's build the momentum. Let's try to understand what this assignment is, because we haven't worked for this particular assignment in the practical life. Even if you are an audit trainee, even if you are working in an audit firm, you haven't, you are yet to deal with such an assignment. So due diligence is a fact finding exercise. We are trying to investigate something. Usually it is conducted to reduce the risk of making poor investment decisions. So in Pakistan, for example, 3 years ago, a telecom company called Mobilink purchased another telecom company called Warid. Just a raw example. Another example could be, in the recent past, Elon Musk purchased 9%, if I'm not wrong, 9 or 11% of the Twitter shares. Or in the past, Facebook purchased Instagram, or once upon a time they purchased WhatsApp as well. So they did not develop WhatsApp on their own, and they did not develop Instagram, rather they purchased it. Okay, so just imagine Elon Musk and his allies, his team members, they are looking forward to purchase certain shares in Twitter, or for that matter, Mark Zuckerberg and their team were interested in the Instagram, because Instagram was the next big thing at that point of time, and it is the next big thing, and it is the big thing right now, uh, as compared to Facebook. So what do you expect? Do they have the appropriate expertise to judge which is the correct price they should be paying? Once Mobilink was trying to purchase Varit, are you dead sure that the management of Mobilink were super skilled and qualified to determine at what price they need to purchase Varit? What's the right time to purchase the Varit? Will they be able to create certain synergies with the Varit? So this requires some special kind of expertise, and this particular expertise might not be available in the existing board of the company, the company which wants to acquire. So they will hire an expert, and that expert could be a third party, or it could be their existing auditor, and they could ask to gather certain information for us, because we want to make correct investment decision. We want to avoid poor investment decision. This whole activity is called due diligence. Are you clear? What do I mean by due diligence assignment? Can I have some yes so that I can move on, because it's sensitive? I need to confirmation. Are you clear? What do I mean by due diligence assignment? Okay, great. Thank you very much. So this is what due diligence looks like. Okay, let's continue. Thank you. Thank you. So what's the purpose of due diligence? The purpose of due diligence is to make sure we gather information on the target company. On the target company. So who is going to hire us? We will be hired by someone who wants to acquire, and will gather information about the target company. Maybe we need to gather information about the acquirer as well. That's why existing auditor is in the best position to perform due diligence, because they will only need to gather information about the target company. They already know about the acquirer. How does that sound? So who is in the ideal position to perform a due diligence assignment? Again, the external auditor. Oh, well, you have to consider the self-interest, fee dependency threat. Akhil has raised a question. When we are performing a due diligence assignment, do we directly, investigate the internal data of the target company, or the internal data of the acquiree, or do we do Google it, or do we perform everything? We will try to gather information from all possible sources. So let's move on. Your question will be answered automatically in next 10 minutes. Okay, what's the purpose of due diligence? I think the greatest purpose is to reveal potential problems. What is problem? Something bad. What do I mean by potential problem? Something which is going to be bad in the future. So acquirer, as an acquirer, I want to know the potential problems in advance, and that's why I'm going to hire you as an expert. I don't want to be making decision with my eyes closed. I want you to let me know. I want you to give me the clarity. So I want to realize the potential problems in advance. I want you to make me help. I want you to make me decide whether I should go ahead with the acquisition or not. I want you to help me to decide when I should go for the acquisition. What's the right time? I want you to help me in trying to figure out what should be the correct amount which I should be paying. For that, you will explore the assets and the liabilities of the target company. All that activity. What's the greatest purpose of due diligence? It will increase the stakeholder confidence. It will increase the confidence of the stakeholders. Maybe the bank will provide the loan for the sake of this acquisition, because bank is confident now that the board of directors are making a right acquisition. Are you clear? What's the purpose of the due diligence assignment all over the world? Can I have yes so that I can move on? These are very sensitive things. What's the purpose of acquisition? To open up our eyes. That's great. Thank you very much for the confirmation. Thank you very much. That's great. Ayaz, Noor, Phillips, Taruna, thank you. Okay. The due diligence provider will need to look. Now imagine yourself as someone who will provide the due diligence service. Just imagine yourself as KPMG. You are the external auditor of company Ahmed, and you are also providing the due diligence service to company Ahmed because company Ahmed wants to acquire a professional body called ACCA. Okay, you need to look for the current issues affecting the company because you need to tell me those current issues. You need to look for the prospects for the future. You need to look for the future of the target company. You need to look for the past performance of the target company. You need to figure out what's the main purpose of due diligence. You will ask me, the acquirer, Ahmed, why do you want to acquire this company? Please share your specific reasons or objectives so that we could work according to that, so that we could gather the perfect knowledge or the full knowledge for you regarding that target company. So these are the things. As a due diligence provider, you will look for the financial performance and position of the target company. You will look for the operational matters of the target company. You will look for the market position and commercial matters of the target company. You will look for the legal matters which could arise or which are going on with respect to target company. You will look for the tax matters, especially if the target company is overseas company. You will look for the HR matters. Why HR matters are important? Maybe once you will acquire the target company, all those employees which are contractual, all those directors which are contractual, they might withdraw, they might leave, they might be released from their contracts. So we need to understand the HR matters. As a due diligence provider, you need to look all those factors and you need to align all those factors with the acquirer. So you need to make sure that you are creating a relationship between the target company and the acquirer with respect to all these factors. What will happen after this activity? The acquiring company may decide that the issues and the risk identified are so significant, so big, and they may decide that we are not going ahead with this acquisition. Or even there is a possibility, after realizing the potential problems, after realizing the HR matters, after realizing certain legal issues, after realizing certain financial performance and position, the acquirer will negotiate a reduced price because they will use all those cards in order to reduce their bid. They will reduce the fee or reduce the amount they are willing to pay. Is this clear? Yes, this is going to be a great advantage, Nashir, this due diligence activity. Why the management is not relying on themselves? Because management is not an expert of this whole activity called due diligence. So they are relying on some third party expert. Now, as I told you earlier, this due diligence assignment is an all-rounder. It could be exercised in the form of agreed upon procedures, and it could be exercised as an assurance engagement. If it is an assurance engagement, at the end of the day, you have to express an opinion, and it could be an agreed upon procedure where you will only answer those questions which the client requested. So remember, due diligence can be considered in both ways. What are the benefits of due diligence assignment? I think it decreases the management time spent on assessing the acquisition decision. So they will focus on their main activities and they will outsource this particular assignment to someone else. Operational issues and risk will be identified on a timely basis. The liabilities will be evaluated. Even the assets will be evaluated. The information will be gathered. It will enhance the credibility of the investment decision. As I told you earlier, the stakeholder will feel confident. It will help in planning the acquisition. So all those are the benefits or the advantages of due diligence. Are you all clear with this? Can I have confirmation? Are you all clear? Yes, Daniel, you are absolutely right. The acquirer could use certain elements for the sake of negotiations. You are absolutely right. What if the acquiree don't want to sell the company, but still acquirer is interested? Well, that could happen. The management might not be interested. The target company's management might not be, interested. They do not wish to be acquired. But if the shareholders are willing, well, the execution will go on. The acquisition will go on. Okay, all of you are clear. Now, all that was a build up. All that was for your knowledge. Now, same old routine. What are the acceptance consideration before the due diligence? So as with any other assignment, the practitioner must only take on work of an acceptable level of risk. This is a typical sentence for any acceptance consideration. The acceptance matters given in chapter 6, which we discussed earlier as well, triple P, triple R, IMMF, all that are relevant over here as well. But there are certain additional matters. Additional matter number one, why the company is not using their existing firm of accountants. If they are using existing firm of accountants, this point is not applicable. But why they are not using it? Whether the target company's employees know about the acquisition. This is also important, because if they know about the acquisition, they might be reluctant to share the relevant information with you. They might hesitate. They might have their reservations. Whether the acquisition is a hostile takeover, maybe they are not interested in this acquisition, maybe this is a hostile takeover. In that case, it might be difficult to obtain the information. What's the exact scope of due diligence? Why the acquirer is interested? What do they want out of it? So I want to know the scope of the due diligence, the reason for the acquisition, the deadline. I need to know the deadline, because if the deadline is too tight, I might not accept this client. Any ethical threat? Yes, there is a possibility that self-review threat could be created, because once the company has been acquired, in accordance to your due diligence, that particular assets, that particular liabilities which you quantified would become subject to audit. So this due diligence could lead to self-review threat, and due diligence could also lead to self-interest threat, again because of the fee dependency issue. So last topic, what procedures you are going to apply when you are going to perform a due diligence assignment? You will apply analytical review. You will compare the past financial information to assess the recent performance of the target company. You will review the forecast. So you will look into the future as well. You will look into the existing contracts in order to understand the HR contracts, any legal obligations. You will review the terms and conditions with the related parties that could impact the current performance of the company or the future performance of the target company. You will inspect their asset register in order to verify whether they've in order to verify if there is any possibility of assets being overstated. You will review their accounting policies and make sure they are in line with the acquiring company. Make sure the models and the policies are in line. Review the board minutes in order to identify if there is any particular issue going on which could create, which could be a barrier to acquisition, which could create future liabilities. You need to review the correspondence between the major customers and major suppliers with the target company that could create any legal issues in the future. You need to review the correspondence between the target company and their tax authorities that could reveal potential problems. You need to review the industry reports, because that could identify potential risks as well. So this is how you are going to deal with a due diligence question. Before I move on to the past paper question on due diligence, this is something extremely important, which is called due diligence approach to exam questions on due diligence. So one way to approach the question is to put yourself in the position of the client. What would affect your decision? Why you are interested in X? Why you are interested in Y? Why you are interested in legal contracts? Why you are interested in HR issues? Why you are interested in tax issues? Why you are interested in X, Y, Z? What would make you want to go ahead with the acquisition? What would make you think that it is not a good investment? What would make you reduce the price? For example, would you look for the pending legal actions? Would you look for the outstanding tax investigation? Would you look for the industry reports, the declining market? Would you look for the competitors? Would you look for the reputation? Would you look for the old asset which might need replacement, and as a result, extraordinary capital expenditure in the near future is required? Would you look for the declining financial performance? Would you look for the quality issues? Similarly, the reliability of the assets valuation, the completeness of the liabilities, because the target company would try to overstate their assets. They will try to understate their liabilities. You should look for the human resource issues as well. Are you clear what factors you need to keep in your mind when you are going to perform a due diligence assignment? Is this clear? Can I have yes on that? Yes, Nashir, we need to understand the assets and liabilities because we need to figure out whether we are going to pay the right amount or not. Motor, this is not going to create advocacy because you are not going to promote or defend your client. My dear students, see, you guys are making mistakes with respect to advocacy thread, self-review thread, because ethical issues and professional issues is not a well-prepared area for you. You guys did study all that back 1 year ago, 2 years ago, 2.5 years ago, maybe pre-COVID in your AA. So long ago. So I don't know why the AAA students tend to, incorrectly assume that they are good in ethical issues because they did it in AA, which is clearly not the case. You guys are not even clear with respect to the definition of advocacy threat, with respect to the definition of self-review threat. So don't ignore your B and F, professional and ethical issues, and the audit related assignments. Yes, with respect to due diligence assignment, the question will create no doubt that whether it is a assurance engagement or an agreed upon procedure. You won't have confusion on that. You won't have confusion on that. Don't worry about it. Okay, considering the fact you guys are clear up to this point, I think this is the perfect time to start what? I think this is a perfect time to start a question on what? Due diligence. And the question which I have extracted is from 2017 or 18. This question is available in your exam kit. Once we are done with this question, we'll have a break. Again, we are not going to finish off this question in full because the part B is relevant to what? Check out the part B. Comment on the ethical and professional issues. Now, just imagine, and I'm literally shivering when I say this word. Just imagine there is a student who is going to attempt this exam on Monday, 6 June 2022, and that student is not well prepared for the ethical and professional issues, and that student is not well prepared for the audit related services. What will happen? Okay, is there anyone who could help me? What will happen? So this due diligence has got 7 plus 10, 17 marks, and there is a 8-mark part on ethical and professional issues and provide appropriate actions. What will happen then? Just imagine that student ignored BF. That student ignored the two topics, section B, section F. Out of nowhere, first of all, that student will be absolutely demoralized even at the start of their exam. Even if that student has got the potential to score 48 or 47 out of 75, trust me, that student will not be able to cross 40. Because when the student will realize that there are 25 marks available which are not the strength of that student will start shivering. So out of nowhere, that student will talk to himself or herself, okay, fine, let's ignore that 25, let's not attempt it at all, which is again a poor strategy. You should have given a fight. You should have remained optimistic. You should have tried to score at least 8 out of 25, which is 1/3. 8 threes are 24. So you should have tried for 1/3. You should have tried it. But that student will say or will talk to himself or herself, okay, let's ignore 25 marks. Let's not attempt it. And that student will only focus on 75 marks. And that student will consider himself as Shakespeare. And that student will trust his writing or her writing skills. and that student will imagine that he or she is going to make it out of 75. Out of 500 students attempting 75 mark paper, 470, 480 will fail. 90 to 95% will fail. So please do not ignore your B and F. Do not ignore your best friend. Who's your best friend in AAA? Ethical and professional issues, along with the actions, along with the recommendations. And who's your, second part of the best friend? The audit related services, which is the syllabus area F. I hope this particular moment is going to be a real turning point of your exam preparation. And I hope that will help you on Monday, 6 June, and that will help you on somewhere in the middle of July, when you will explore your exam results. So I hope that will help you. And then you will text me up and I'll reply you. Okay, so let's ignore part B, because I know you can attempt this part B at home. You will attempt it. That's your homework for tonight. Let's focus on part A. There are two sub requirements in part A. Explain why each matter requires further investigation as part of the due diligence review. So there are two matters. Matter number one, matter number two. You have to explain why you believe that these matters require further investigation. Again, you'll have a brief introduction from the question. You will discuss their materiality. You might want to have discussion on the relevant accounting standard, and you will, now the bookish knowledge will be applicable. Those items will be important for the acquirer, because that could, lead to a situation where the target company might not wish to go ahead with the acquisition. The target company might want to reduce the price they are willing to pay. The target company might want to realize that this is a potential future cost. So they need to be, they need to open up their eyes. So you need to realize that these factors are important. Why each matter require further investigation? Because it could lead to factors such as this one. They could affect the decision of the acquirer. They could lead to a situation where the target company might not want to go ahead. The acquirer company or the target company might want to realize there are certain, outstanding, maybe tax issue, maybe declining. So this is what you have to relate those items with this. Part 2, recommend the investigation procedures to be performed. For 10 marks, you need to come up with 10 procedures. And your procedures will be, ideally speaking, you could split those procedures into 5 and 5. Why I'm saying 5 and 5? Because there are two issues. So your 5 procedures could be on this issue, 5 procedures could be on that issue. Is this clear? Are you happy with the exam requirements as of now? Sir, when answering the questions, do we have to put introductory paragraph for each question? Do not put an introductory paragraph, but give a brief introduction. Give a very brief introduction, because normally there are no marks for that. But normally an introductory paragraph would lead you to a nice build up to your answer. You can always rely on copy paste technique for the sake of introducing what's going on. You can even extract something from the question itself. Sir, why each matter is it asking for advantages? Nasheer, I didn't get your question. Why each matter is it asking for it? No, it's not. They're not asking for advantages. They are asking why it is so crucial. Why it is so crucial. So you need to relate it, because it is going to affect the acquisition decision, not exactly an advantage. The introductory paragraph does not exactly give you marks, but sometimes there is 1 mark for that. Sometimes there is. So it's better to create an introductory paragraph without utilizing much time, extracting it from the exam requirement itself. As a student, it gives you a nice start. Okay, Daniel is saying, please elaborate first exam requirement again. Daniel, you are performing a due diligence assignment. Your audit firm is called Leopard and Company. Daniel, I'm answering your question. Listen to this. You are a manager in an audit firm called Leopard and Company, and you are currently assigned to a due diligence assignment. You are currently assigned to a due diligence assignment to one of your firm's audit client. Your audit client is called Cheetah Company. Now just understand, your audit client is called Cheetah Company. Your audit firm is called Leopard Company. Ignore Leopard Company as of now. There is no usage of Leopard Company anymore. So your audit client is called Cheetah Company. That Cheetah Company manufactures bespoke furnitures. That Cheetah Company wants to purchase another company called Zebra Company. That Zebra Company is, I think, expert. The engagement is to conduct a financial and operational due diligence review of Zebra Company, a company which has been identified as a potential acquisition target by Cheetah Company. So your audit client, Cheetah Company, wants to purchase what? They want to purchase Zebra Company. Why they want to purchase Zebra Company? They want to purchase Zebra Company because they believe that this will create synergies. Okay. Okay, maybe Zebra Company is also involved in in manufacturing furniture or something. Now, as part of the due diligence review, you have been asked to provide a valuation of Zebra Company's assets and liabilities and analysis of the company's operating profit forecast. So you are performing a due diligence review, and you need to understand the assets of the Zebra, you need to understand the liabilities of Zebra, and you need to understand the future of the Zebra, the profit forecast of the Zebra. This will help the audit client of your audit firm. The audit client is called Cheetah Company, in determining the appropriate purchase price. So this is what the background is. So there is an audit firm called Leopard Company. There are two different departments. One department is involved in auditing. The other department has been assigned the task of due diligence. They are going to perform due diligence for the sake of Cheetah, and the target company is called Zebra. They want to understand the assets, they want to understand the liabilities, and they want to understand uh, what price they need to pay, and they need to understand the future profit. Now, during the engagement, during the field work, now Daniel, your answer. Once they were performing the due diligence, they identified two specific issues, two very sensitive issues, and those issues require further considerations. Now, what are those two issues? Once we will read those issues, the examiner is asking why those matters require further investigations, considering you are performing due diligence. So I will explain to the examiner that these issues will require further investigation because A, they are material, B, this is the underlying standard, C, this will have an impact on the future profitability, this could lead to future costs, this could have future implications with respect to the reputation, this could create problems in the future synergies. So this is how I'm going to build up my answer. So the examiner is asking why those two issues are so important when you are performing due diligence. Are you clear and happy, Daniel, now? Oh, Daniel has already answered my question quite much clear, and thank you very much. Most welcome, Daniel. Yeah, Nashir, why not? Materiality is the best friend forever. Yes, Fazila, anything which could affect the reputation, why not? Clear, clear, clear. Thank you very much. As of now, this is neither an agreed upon procedure nor an assurance engagement. Okay, that's quite an interesting thing. Ayaz is asking what kind of assignment is this? This is not clear. Examiner has not revealed in the question whether it is an agreed upon procedure or a assurance assignment. You are not supposed to look for this. Ignore it. Examiner is asking to focus on two things. Ignore it whether it is an assurance assignment, ignore it whether it is an agreed upon procedure. Just focus on two things out of so many things, and just apply procedure on two things. So out of this huge assignment called due diligence, examiner is focusing on two things. Examiner has narrowed down the thing. How does that sound? Ayaz, is this clear? We don't have to worry about it whether it is an assurance assignment or not. Can we continue? Yes. Okay, thank you very much. So now let's read the issues. While reviewing correspondence with customers in relation to outstanding receivables. What customers? You are reviewing the correspondence with customers. Whose customers? The customers of the zebra, the target company's customers. Okay, try to understand. You work in leopard company, forget leopard company. Your audit client is cheetah, and cheetah company has requested you to perform due diligence on zebra. So let's focus on zebra. While reviewing correspondence with customers in relation to outstanding receivables, one of the team found a letter from a large retailer, definitely a large receivable balance, for which zebra company produces number of unique products, providing advance notice that they are not going to renew their purchase agreement when the current one will expire. Okay, hold on. Please read this statement all over again and tell me, is this going to have impact on the future profitability? Is this going to have impact on the future sales? Is this going to have impact on the price which the cheetah company might be paying for the zebra? Is this, what do you think? Could this lead to, implications on what amount cheetah company would be willing to pay? Can this help in negotiating a better price? Okay, Ibrahim has asked that seems to be an agreed upon procedure. You don't have to worry about it. The assignment is a larger one. Examiner has narrowed it down. Don't worry about it whether it is an assurance assignment or not. Forget it. Trust me on that. Forget it. Yes, Daniel is saying, and so is Nasheed, that it will impact the future revenue of Zebra until or unless compensated by Zebra in other way. I will write this in my answer as well. Maybe Zebra company might be able to compensate the loss of this customer. Otherwise, it will have an impact, because according to the question, it is a large customer. Yes, it will impact because it will result in low sales, leading to maybe less profits. Thank you, Ayaz. It could reduce sales significantly as it is a large retailer. Very well done, Fazila. This will impact revenue for Cheetah as well once they are consolidated. Yes, absolutely. It will have impact on sales. Thank you, Ammar. Thank you. Due to loss of large customer, it may cast doubt on the going concern of not the cheetah, zebra. So that could be an impact as well. Very well done. You know what? Trust me, you don't need my help anymore. If you are willing to work harder, if you are willing to remain aggressive and optimistic, these are two different words. Aggressive means you are willing to work harder, you are willing not to give up, and optimistic means you need to understand that you are not supposed to produce an ideal answer. You can attempt this answer on your own. Let's continue with the question. The company advised that they are switching to a new entrant into the market who is substantially cheaper than Zebra company. What do you think? Is this sentence important with respect to due diligence? Is this sentence is also important? That large retailer who is going away, who is going tata bye bye to my target company Zebra, that large retailer is going because of a particular reason. Is this reason important? Yes, this is important because you never know. You never know. Zebra company might lose other important valuable customers as well because of that new entrant who is offering substantially cheaper prices. So this particular point could lead to a situation where cheetah company might not want to purchase Zebra company, or they might want to reduce the amount they are offering to pay. So this is important. Now you know the answer. That's why I started with the topic. Once you are strong at the topic, the past paper questions are not a mission impossible. Let's continue with the question. A brief analysis has identified that customers on an average almost provide, that customer which is almost gone, that customer which has said tata bye bye, they contribute to the 5% of the zebra's revenue. Is this material for zebra, for the financial statement of zebra? Is this material? And are you going to have this point, are you going to discuss this in your answer? Absolutely yes. So I think you have already covered the part A. I don't think so you need to read the solution. I think you can write your own answer, then you can copy that answer. If it matches 50, 60, 70% match, you should feel confident and optimistic about it. You should not feel depressed. Then what you are going to do, don't give up, don't move to the next question. Extract an ideal answer from the past paper and then learn it. This is the right way to prepare AAA. What's the most pathetic way to prepare AAA? Read the question, read the solution, tata bye bye. That's the most pathetic way. What's another pathetic way? Read the question, read the solution, and say, oh my god, I can't do that. So the correct way is to develop your own answer. Even if it matches 50%, 2 thumbs up, give a tap to yourself, well done, you're at the right path. Then using the answer, extract an attainable answer, create your perfect answer, and then learn it. What investigation procedures you are going to perform? I think you need to have discussion with the management of zebra, what countermeasures they are making. Do they have any plan to compensate the loss of this valuable customer? Maybe they have got a plan to stop the loss of this customer. Maybe they are having negotiations, maybe they will be able to stop it. Have a discussion with the management, what are their point of view regarding what if other customers might leave as well. Similarly, you need to consider the financial implications. You need to consider, you need to confirm whether exactly 5%, whether that customer literally contributes to the 5%. Maybe it contributes more than 5. So there are certain procedures which you can perform, such as you need to inquire the management that what implications it will have, whether they have any plan B. You need to inquire with the management once they will lose certain customers, a very important customer, what they are going to make of those employees which will be free because of the loss of the major customer. You need to obtain any correspondence with major customer. Maybe other customers are having the same issues or same concerns as well. You need to inquire the manager whether they have any particular inventory specifically made for that particular important customer, because they make bespoke inventory. What if there are certain bespoke inventory in the warehouse, and they need to be recognized, so extra liabilities will be charged, extra expense will be charged, they might be impaired. You need to inspect the forecast prepared by the management. Make sure they have not incorporated that particular important customer in their future forecast, because that customer is going. Is this clear? Why this matter is so important for you? Because it will have impact on the forecasted sales and profitability. It will have impact on the future competition as well, because other customers might switch as well. And even this issue is important because the underlying assets could be impaired. What kind of assets? If there are certain inventory specifically designed for that particular customer, that could be impaired. If there are certain property, plant and equipment, certain machines specifically designed for that particular important customer, they could be impaired as well. I think on the day one of the webinar, we had this discussion that if there are certain loss of sales, this could lead to an impairment with respect to plant. Because if the plant is specifically constructed or designed or purchased for certain sales, and if that certain sales are going down, that could lead to extraordinary impairment expense. So are you clear with all that? Are you clear with all that? Let's quickly explore the marking scheme. Marking scheme. Marking scheme. This question, these are the examiner's comment. This question focused on due diligence, where a separate team from the firm were working on a due diligence at an audit client. Two issues had been identified, and the candidates had to explain why they warranted further investigation. This is the first requirement, and what procedures they would perform. Stronger candidates here were able to see the future implications for the valuation of the target company from both the loss of the major customer and new entrant into the market, and from the ownership of the land with restricted use. This is something which we have not studied so far from the question. This is something which we have not studied. Restricted use of a particular land. That's the part 2. Candidates should try to remain focused on the future value of the company. Don't think about the past, think about the future, because that will lead to the financial performance in the future. Okay, what about the marking scheme? Up to 1.5 marks for each matters discussed, half mark for the identification of relevant point. So you will identify something from the question, and then when you are going to explain it, you will get further 1 mark. Half mark from the identification, then you have to explain, and 1 mark per procedure. Is this clear? Is this clear? Okay, let's quickly read the part 2 as well. Zebra company owns a piece of land which was given to them as a gift by the local government 10 years ago. The land surrounds the entrance to the main production premises and is designated as a nature reserve. Nature reserve means you cannot have any construction or any activity on that. You have to keep it the way it is. Restrictions were imposed on the usage of land, which also limits who the owner is able to sell the land into the future. The land has 0 carrying value in the financial statements. So if it has 0 carrying value, this is extremely important to understand that the acquirer will not be able to utilize that land. In fact, that acquirer has to has to understand that there is a certain amount of cost associated with it. If it is a green land, if it is a nature reserve, you need to expense something. You need to make sure that it is well decorated, it's well well watered, it's properly planted and all that. So this is another issue. If the target company has got this land in their mind, they should understand that there is you can't construct anything on that. You cannot come up with anything on that. Is this clear? So I am not going to have discussion on the part 2, which is about the gifted land. I'm leaving it for you. I am sure you can do that. If you have got any questions, please post your questions relevant to due diligence or the relevant to the review of interim financial information. My dear students, up till now we have covered 2 audit related services. Which one? Review of interim financial information and due diligence, along with the past papers. Okay, after the break, we are going towards the 3rd audit related service along with the past paper question. And that past paper question will be from, so that cheetah was from 2017, and the next question will be from December 2019. December 2019. So hold on, we are going to have discussion on forensic audits. We are going to have discussion on forensic audit along with the past paper question from December 2019, and we might be able to have discussion on advertising, which is a topic from the day 2 of the webinar, practice management. So now what is the target in the next 1 hour? We'll have a discussion on forensic audit. We'll have a past paper question on forensic audit from December 2019. Second agenda, we'll have a discussion. We might be able to have discussion on advertising, which is part of the practice management, along with a past paper question. Last but not the least, I need to let you know the marking scheme of the day 1s of the webinar, audit risk, specifically with respect to a question using analytical procedures. So we have got much to cover. As of now, according to my clock, it's 10:32 p.m. Let's just have a break for 8 minutes. Let's come back at 10:40. Is this clear? Are we coming back at 10:40? I'm not going to have discussion on prospective financial information, Anas, because prospective financial information was part of the very last attempt. It is not possible to cover all 6 assignments, but I've got much to cover in the next 1 hour. Forensic audit, advertising, analytical procedures. So hold on, don't go anywhere. Stay tuned. I will be answering your questions. I'll be, having a quick word at the end of the session to, make you motivated. Nasheer, I can't say that prospective financial information will be examined in June or not, but most likely no. But don't think like that. You should attempt at least one question on pre-FI as well. Okay, I'll see you after 7-8 minutes. Please hang on. See you. Okay, let's resume. And before I resume, uh, Siddiqui, you have handout on PFI we can study from. My strong advice to all of you is that there are certain chapters which you should prepare from your study text. If not BPP, at least Kaplan book. What are those chapters? 6 chapters relevant to the audit related services, plus chapter number 6 relevant to the acceptance consideration, including tender, advertising, and maybe something relevant to the money laundering as well. But again, money laundering was tested in the recent past in the March 2022 attempt. You might take a risk to skip that. Otherwise, at least chapter number 6, acceptance consideration, that tendering, advertising, all that, and all those acceptance, all those audit related services, including the one you are referring to, PFI. Is this clear? Okay. Let's start another small topic which we can, cover within 10 minutes. And it's not an audit related service. I'm just trying to make a change. And this topic is called advertising. Now, my dear students, advertising is part of the practice management. So quality control and practice management. So it's part of the chapter number 6, which I was just referring to. So you need to prepare chapter number 6 from your study text. In the chapter number 6, you will realize what triple P, triple R, IMMF is. In the chapter number 6, you will realize what's the process of tendering, how audit firms are how audit firms are going to advertise themselves. So this topic is from advertising, which has got nothing to do with your AA. It's a pure triple A topic. Let's check out the exam requirement. We just have to discuss this 7 marks. Comment on the suitability of the advertisement. So you have to comment on the suitability of the advertisement, whether the advertisement is suitable or not, right or wrong, appropriate or inappropriate. Discussing any ethical and professional issues raised. So once you will read the advertisement, you will realize that there are certain things which are below the par. They are below the belt. They are not appropriate. They are not ethical with respect to an audit firm. They are not professional enough. The wording is not professional enough. Now, you are a manager in an audit firm called Raphael and Company. Okay. And it's a firm of accountants which has 12 offices. So seems to be a medium-sized firm with 12 offices. Okay. Then what? And there are 30 partners in total. Okay, fine. And out of 30 partners, 10 partners are the members of ACCA. So out of 30, 10 members are the partners of ACCA. So if you know this thing, very well done to you. But if you don't know this, learn it right now, right here, that if less than 50% of the partners are chartered accountant, the audit firm cannot name themselves, cannot advertise themselves as chartered certified accountants. They can't call themselves like that. So considering the 10 members are the members of ACCA out of 30, this audit firm cannot recognize, cannot advertise, cannot claim themselves as Raphael and Company chartered certified accountants. No, why not? Because they do not have good enough chartered accountants within their, at their partner level. Is this clear? Are you clear with the first point? And I think this is the first mistake. I think this is the first mistake in their advertisement, because this is what an advertisement. What's that in the box? This is an advert. So this is a mistake. Okay. An advertisement has been drafted as part of the firm's drive to increase the number of clients. So they want to increase the number of clients, no problem with that. It is suggested that it should be placed in a number of quality national as well as local newspaper. No problem with that. They can advertise it in national and local newspaper. They are a medium-sized firm. They will have the coverage of at the national level. Okay, fine. Let's start the advertisement. Up till now, there is no mistake. Yes, I have found a mistake, but at the end, which is chartered certified accountant, because I know they don't have the good enough numbers of chartered accountants. They can't call themselves as chartered certified accountants. Let's start the advertisement. Have you had enough of your accountant charging you too much for poor quality services? Is there any mistake, or is there any mistakes in this first sentence? Can you please help me? Anyone who could help me? If not, if you're not prepared for this topic, oh, well, I've got a feeling that majority of you are not that prepared for this topic. Okay, okay, okay. Have you had enough of your accountant charging you too much, so you can't criticize other accountants for overcharging or for overpricing? You have to focus on your price. You can't have a discussion on the prices of others. So that's the first mistake. Charging you too much. This is the first mistake in your advertisement. That's not being professional. You should not and you cannot criticize the fee charged by your competitors, by your by your other professional accountants. So that's the first mistake. And the second mistake is, you cannot criticize them for poor quality. You should focus on your quality. You cannot blame others. This is not an advertisement for a shampoo, or this is not an advertisement for a soap. You can't be so unprofessional. So that's the second mistake. Let's continue with the advertisement. Does your business need a kickstart? Is there any mistake over here? This is part of the yes, yes, absolutely right, Fazila. Kickstart is a slang language, not a professional language. So you can't say, does your business need a kickstart? Let's party. You can't use such wordings. You can't use those slang wordings. So this kickstart is a slang language. It's not professional enough. You can't use that kind of a wording in your advertisement. So that's the third mistake. Let's continue. Look no further. Raphael and Company, which is the audit firm, provides the most comprehensive range of finance and accountancy service in the country. Is there any mistake? I'm not completing the sentence. Up to this point, is there any mistake? Is there any mistake? Look no further. Raphael and Company provides the most comprehensive range of finance and accountancy in the country. This is not possible that you have the most comprehensive range. It's not possible that you have got the most comprehensive range of both finance and accountancy services, because you're not the number one firm of the country. You seems to be a medium-sized firm. Most comprehensive means you have got you're the number one. It's not possible that you have got the most comprehensive range. So it seems to me that this is a claim which you won't be able to prove. So this is a claim which you might not be able to prove. So this is not a right claim. You cannot make such claims which you cannot prove, which are not true. So this is another mistake. As well as having the leading tax team in the country who are just waiting to save your money. What's the mistake over here? According to your advertisement, your tax team will save the money. So this is an indication that you are willing to go, beyond the boundaries, and you might commit not even the, you might commit the tax evasion. You're allowed to come up with tax avoidance, but that statement reflects that you might commit tax evasion, which is again not allowed. That statement that you are going to save the money is a this could give a poor indication, which is not allowed. This could give an indication of an illegal activity, which is not allowed. Still not sure? We guarantee to be cheaper than your existing service provider. Is there any mistake over here? You cannot provide guarantee that you are going to be cheaper, because in the world of accountancy, in the world of audit, in the world of professional accountants, the fee is in accordance with the risk. The fee is in accordance with the workload. The fee is in accordance with the situation. We cannot guarantee in our advertisement that we are going to be cheaper. So this is another mistake. And for the month of January, we are offering free. And for the month of January, we are offering free business advice to all the new audit clients. This is another mistake. You cannot provide free business advice, especially to your new audit clients, because you do not have good enough information and understanding of your new audit clients. So how can you provide business advice to someone you don't have knowledge of? And more importantly, if you are going to provide business advice, this could lead to management threat, and this could also lead to self-review threat, or this could also lead to other ethical issues. So drop in and see us at our local office for a free consultation. This drop in and see us at our local and at your local office. This is again not a professional statement. You should have referred to, so okay, this is our contact number. You need to send your inquiries to this email or this phone number. What's that drop in? This is something which two friends are going to use. Drop into my place. This is not professional enough. So there are many mistakes in the advertisement. Advertisement is a topic from the practice management. Practice management is something which we try to explore on the day 2 of the webinar. Is there any confusion? Are you all clear? Are you clear? Low balling is allowed, but we can't say that we guarantee to be cheaper. Is this clear to Umar and Ibrahim? Yes, there is a risk that when they are going to charge so low fee, they might cut corners. They might compromise on quality. So are you clear with respect to this little topic, which could be tested for 5 to 7 marks? You never know. Are you clear? So Ayaz is clear. Nashir, you are most welcome. Okay, that's great. Now we are left with what? Okay, now we are left with another audit related service which I selected for the today's session, and the name of that topic is called forensic audits. Remember, forensic audits are always tested as an agreed upon procedures. It's never an assurance assignment. Okay, what is forensic auditing? Forensic audit refers to the specific procedures Umar, Ayaz, or Manoj is going to apply. Why they are going to apply? Because they are going to come up with forensic investigation. Why forensic investigation? Because you want to gather certain evidence. You are going to apply your traditional financial auditing techniques. You will apply analytical procedures. You will inquire from the management. You will inspect the documents. You will recalculate certain things. So you will apply all those traditional auditing techniques. Why you are going to apply forensic audit techniques? Why you are going to apply traditional audit techniques? Maybe you want to quantify a fraud. Maybe you want to quantify a fraud, or maybe you want to verify an insurance claim. So these are the two possible shapes of the forensic audit. So up till now, what I've taught, forensic audit is an audit related service. It is always going to be an agreed upon procedure. It is never going to be a assurance engagement. Agreed upon procedures are of there are two possible shapes of agreed upon procedures. One, forensic audit. Number two, due diligence. So if you are going to cover forensic audit, your agreed upon procedures are all finished. Some of the major applications on forensic auditing are shown below. So it could be a fraud investigation, such as there is a theft within the company, maybe some kind of insider dealing within a company. So you need to investigate the fraud. Maybe you need to verify an insurance claim. Maybe the company wants to claim something from their insurance provider, but they want you to verify that insurance claim so that they don't have to, they don't want that insurance claim to get rejected. Similarly, maybe you need to come up with maybe you need to perform a forensic auditing in order to verify some professional negligence from someone, loss suffered as a result of placing reliance on a professional advisor. So you need to investigate whether that individual was guilty or not. Okay, there are certain practical examples. Okay, as we have observed, whenever we start any audit related service, the pattern is same: definition, the background, and then what? Acceptance consideration. And it is very, 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 very important, extremely important. So let's concentrate for the next 5 minutes. As with any assignment, whether it is audit, whether it is review of entire and financial information, whether it is due diligence, or whether it is forensic audit, the practitioner must only take on work of an acceptable level of risk. That's a typical sentence you can use in your answer. The acceptance matters given in the chapter number 6, which you are going to prepare tomorrow, is very important. Most importantly, for forensic audits, the practitioner must ensure that they comply with fundamental ethical principles. When you are performing forensic audit, you should take great care of your fundamental ethical principles. Why I'm saying that? Because once you are involved in the forensic audit, most likely that you are going to be involved with criminals. You will be involved, or you will be in a situation where a crime has happened. So you will be in the environment of criminals. So maybe you are involved in a situation where there is a crime minister. So you need to, you need to be very skeptic. So you need to take great care of your fundamental ethical principles, because when you are involved in a forensic audit, there is a huge possibility that somebody will offer you bribe, somebody will come up with intimidation threat. So the situation is going to be very complex and very sensitive. So you have to be very alert with respect to, and very sensitive with respect to, your fundamental ethical principles. Which fundamental ethical principles might be at stake once you are involved in a forensic audit? Examiner could come up with a question such as that. Which fundamental principles you need to take care of, or what factors with respect to fundamental ethical principles you need to evaluate once you are involved in a forensic audit? Number one, if I am involved in the forensic audit, I need to make sure I'm competent enough to do the job. So which fundamental principle? Remember my day 2 ICOP square. It's about professional competence and due care. So I need to make sure I'm competent enough. It is not a typical audit. So I need to make sure I've got the, expertise on forensic audit, and I need to work with due care. I need to make sure I take great care of the evidence, the custody of evidence. You might have seen in the movies, such as in Bollywood movies, the evidence is so critical. The criminals or the villains, they try to steal the evidence, right? So you need special kind of competence and due care. You need very strong personal skills in order to exercise a profession, in order to exercise forensic audit. An ordinary person cannot be a forensic auditor. You need to have very strong communication skills. So this is the first fundamental principle you need to take great care of. Secondly, yes, for any audit assignment, confidentiality is important. I think for any audit related service, confidentiality is important. But when it comes to forensic audit, the confidentiality is so very important. You cannot disclose your findings in the newspaper. You cannot disclose your findings to your neighbor. This could have serious implications for the share price. So you need to make sure to whom you are going to report. You need to take care of the laws and regulations. You need to take great care of your addressee. This is a very sensitive issue. And I think last but not the least, you need to make sure your objectivity is not compromised. You need to make sure you are not biased. You need to make sure you are unbiased, and you should be perceived unbiased as well, because you are involved in a very sensitive assignment called forensic audit. You should avoid advocacy threat, because the firm may feel pressure to promote an interest and point of view of the client. If maybe you will feel that I need to protect, I need to defend the client. If I'm going to disclose all that, the client will collapse. You need to make sure that you avoid self-review threat, because there is a possibility once you are involved in a forensic audit, you might identify an issue which was subject to audit some point ago. So normally speaking, if the same audit firm has been appointed for the forensic audit, which is not normally the case, but if the same audit firm is involved in the audit and in the forensic audit, separate teams must be used for the different engagements. Is this clear? Separate engagement teams must be used in order to avoid self review threat. Otherwise, normally speaking, you need to make sure that different firm is used. You need to take great care of your integrity when you are performing forensic audit, because you are involved with criminals. So there is a huge possibility of bribe, there is a huge possibility of intimidation, and your behavior should be professional enough. Is this clear? What factors you need to take great care of when you are involved in the forensic audit? What factors you need to consider before accepting a assignment called forensic audit? You need to take care of your competence, all that. Is this clear? Can I move on? Okay, what about the level of assurance? I already taught you that no assurance would be given. No assurance. This is a complete fact finding exercise, also known as agreed upon procedure assignment. Is this clear? Will work according to the requirements of the client. How are we going to plan and perform forensic audit? We'll inquire, we'll inspect certain documents. We even will apply test of controls. Now that's important. Tests of controls are important for the sake of forensic audit. We'll apply analytical procedures. We'll apply computer assisted audit techniques such as automated tools. This is extremely important in order to grasp the December 2019 past paper relevant to forensic audit. This is extremely important. We'll apply inquiries. We'll we'll look for the documentary evidence. We'll apply the test of controls. We'll apply the analytical procedures, and we'll apply the automated tools. Once we are going to execute the forensic audit, at the planning stage, we need to hold a meeting, and we need to understand the objective of the investigation. What's the objective of the investigation? Whether the management wants to identify the fraudster, whether they want to quantify the loss, whether they are going to use me as an expert witness in front of the court. So I need to understand what's the objective of that meeting or of that assignment. Okay, I'm skipping certain procedures, certain things. What specific procedures? I will inspect for payments for evidence of authorization. I'll use softwares in order to understand bank accounts and any unusual assignment. I will again use audit software in order to identify is there any particular employee who has not taken sick leaves or any entitled meal leaves at all, because one who is going to be involved in the fraud would have no leaves whatsoever. I'll inspect the reports in order to identify who made the authorization. I'll use analytical procedures in order to identify unusual trends. I'll look for the certain documents, whether the goods were authorized, whether the purchases were authorized, whether the controls are clear. I will inspect the company's insurance policy in order to understand certain things. Is this clear to everyone? Is this clear to everyone? Can we move to the past paper question? Okay, it's time to move to the past paper question. Thank you, Ayaz and Amar. Okay, so this is the question we have. It is from December 2019. So those 8 past papers which you are going to prepare, this is one of them. Part A, evaluate the matters which should be considered before the firm accepts the invitation to perform a forensic investigation for BEYER company, beer company. So this is a question also available in your exam kit. This is the name of that question. This is a question available in your exam kit. This is a question from those 8 past papers. Are you comfortable with the exam requirement considering what you have studied from the study text? Evaluate the matters which should be considered before your firms accepts invitation. So this is acceptance consideration. All those things, triple P, triple R, IMMF is relevant. But along with that, what else is relevant? What else is relevant? Apart from that, professional competence and due care. Before accepting, we need to check professional competence and due care. Before acceptance, we need to make sure whether we'll be able to maintain the confidentiality. We need to make sure whether we'll be able to remain objective, whether we'll be able to manage self-review and advocacy threat. We need to evaluate our integrity, professional behavior, all those factors. Now, I'm not saying everything will be applicable. It depends upon the question. Is this clear? Yes, we need to evaluate whether we have got the skills and the resources and the availability of the resources at the time, whether we'll be able to meet the deadlines, whether the fee is good enough, whether we'll be able to whether the fee will be able to compensate the risk, whether the overall risk is acceptable, whether the client is going to use us for the sake of quantification of loss, or whether we'll be used as an expert witness. What's the objective of the assignment? So all that bookish knowledge will be applicable. Thank you, Zishan. You are a manager in the forensic department of your firm. Now, considering the firm has got a special forensic department, I don't think so that competence is an issue. I will say, considering we have got a pure whole forensic department, we believe, or I believe, that the one of the acceptance consideration, which is about the competence, is not going to be a problem, and will have the competence. But the availability of the resources at the right time could be a challenging thing. So competence is different, and the availability of resources at the right time is different. So examiner will appreciate if you are going to recognize that there is a forensic department, so competence won't be a problem. You have received a request from a client called BEYER company about an inventory fraud. So they had an inventory fraud, and now they want your services, which was brought to the attention of the company's audit committee by a whistleblower. So the audit committee was made aware of a fraud by a whistleblower. Whistleblower is someone who explodes, and they reveal that this fraud is going on, and they would like their identity to be remain in private. They don't wish to their identity should be disclosed. B company is not currently a client of your firm. So considering this company is not your client, so before acceptance, one of the things which you need to consider was ethical issues, and one of the ethical issue was a possibility of self-review threat. That threat is not applicable over here, because this is not your existing audit client. So I hope you're getting the point. B company manufactures and sells parts used in the automotive industry to both car manufacturers and to the garages specializing in the repair and servicing of cars. The audit committee would like K and company to perform, which is your audit firm. This is your audit firm, to perform forensic investigation to quantify the loss suffered. So they want you to perform forensic audit. Why they want to perform that? In order to quantify the loss suffered as a result of inventory fraud. And they also want you to recommend improvements in the company's internal controls. Okay, improvement in the internal controls. That's what we studied in the AA exam, to avoid similar issues in the future. In addition, the audit committee has mentioned that although the quantification of the loss is to form the basis of the insurance claim, the matter has been reported to the police, who will be investigating the matter further. So I need to understand whether I will be playing the role of a second fiddle, whether I'll be helping the police, whether I'll be used as an expert witness. And we also need to, they also need our recommendation in order to avoid further issues. And with there it is, evaluate the deficiencies in the company's internal control system and explain how they could contribute to fraud, together with recommendations to prevent such a fraud occurring. This is all from AA. Trust me, this is all from AA. So this is part A. This is not a challenging one. So we need to understand what client is expecting from us. I need to understand that whether it is what client is looking forward to. They want to quantify the loss, or they also want to make me or they also interested in identifying the fraudsters. So I need to understand the nature of the assignment in advance. So that's the first acceptance consideration. Similarly, I need to investigate what's the time period of this investigation, because the time period of this investigation will have an impact on the fee. Similarly, I need to understand that what is the role of the relevant authorities such as police. For example, it is possible that the police might gather their own data and I might gather my own data, or maybe the police would help me in finding, or maybe the police will use me as an expert witness. So the police is involved, and I am as a forensic auditor is involved. Once I'll gather my findings, the police will help me as an expert witness. So I need to understand all that. It is therefore vital that before any terms are agreed or engagement contracts are signed, the audit firm need to speak to the authorities to confirm, to ascertain whether there will be any criminal investigation, whether there will be any legal actions, police involvement, legal case. Confidentiality. Firms providing professional services must always ensure that the information relating to the client is not given to the third parties without the permission of the client. So I need to understand whether I need to disclose any information to the insurance claim company or not, whether I need to disclose any information to the police or not. So this is what I need to clear before this is what I need to understand before accepting the client. The firm must confirm with the client what type of report they would expect as a result of engagement and whom the reports would be distributed to. I need to understand that whether they want me to report it to the client only, to the audit committee, to the public. So I need to understand whether my report will be used for the insurance claim. So I need to understand all that. Last but not the least, considering you do have the department, competence might not be an issue, but you do need to consider the availability of resources. You do need to consider time pressure, deadlines, and the availability of resources. You need to consider the due diligence. Again, chapter number 6, triple P, triple R, IMMF. What's M? IMMF. What's M? There are two M's. Management integrity. Number second M is money laundering. What's money laundering? Client due diligence. Before accepting this new client, because this is not your existing client, you need to evaluate the client due diligence. You need to know they are not criminals, they are not involved in terrorism or any other illegal activity. So all those anti-money laundering laws and regulations are applicable, and you need to identify who they are. So these are all factors which you need to consider before accepting this new client for the sake of forensic investigation. Up to 2 marks are available. There are 8 marks. So if a student would come up with 4 or 5 points, that student could get complete marks. Is this clear? Is this clear to everyone? Skills, resource, access of records, all that. Well done, Zishan. Okay. So you have to extract your own answer. You have to build your own answer for this part. What's the topic? What are the acceptance consideration before you accept an appointment as a forensic auditor? What factors you need to consider before accepting a forensic auditing assignment? So read the question, read the factors which you need to consider from the book, read the solution, develop your own answer. Thank you very much. Okay, the question is a bit lengthy one. What about part B? recommend the procedures which should be performed in order to quantify the inventory loss. So you will read this part B and you will realize that certain inventory has been lost. So let me quickly, give a review of that question. You can do it, this question, at your home by yourself. Actually, the story is the sale manager and the warehouse manager, they were doing a fraud. They used to generate a fake order with the name of a fake customer, and the order used to be generated, the good dispatch note used to be generated, and the goods and those items were used to be removed from the company's premises, and then a sale return entry or some kind of reversal used to be made. But that item used to be, the company, that warehouse manager used to sell those items somewhere privately using internet. So they were using some fictitious customer. They were selling those things on internet, and they used to split the proceed with the warehouse manager and the sale manager. So all that was going on. And the part 2 says evaluate the deficiencies in the company's internal control system. There are many deficiencies in the internal control system, such as there is no segregation of duty, there is no lack of segregation of duties, the authorization process is not segregated, even the reversal, when there is a cancellation of sale, the same individual is there. So there is no segregation of duty. So there is no segregation of duty with respect to warehouse. That same warehouse manager counts the inventory, so he knows he has made certain frauds. So this is how you are going to come up with a control deficiencies, and you need to come up with recommendations. The recommendations would be, there should be someone other than the accounts department who should perform the stock count. There should be someone senior who should make sure that all those cancellation of sales should be reviewed by someone senior. So this is how you are going to attempt this part. This part 2 will not be difficult for all those students who remember the control system questions from the AA, the control deficiencies and the recommendation part. This is absolutely similar. You will realize there are control deficiencies within the system. No authorization, no segregation of duty. So, no documents, same individual is involved in multiple things. So this is not a difficult part. Yeah, this is a flash. You're absolutely right. This is indeed, this is a flashback from AA. Okay, guys, before I go to the Q&A section, and before I conclude today's session, something extremely important. In your exam, there are 3 questions. The first question is always for 50 marks, having 4 professional marks, and 46 marks are available as of actual requirement. There are 2 questions available in your section B, and one of the question in the section B will always be on completion, review and reporting. The question number 3 will be most likely a combination of ethical and professional issues along with an audit related assignment. The question number 1 will always be at the planning stage. Within the question number 1, there could be a flavor of ethical issues. Within the question number 1, there could be 5 to 6 marks available for procedures, such as substantive procedures. But the greater majority of the marks for the question number 1 will always be about the planning and the acceptance consideration for an existing client, for a new client. All those acceptance considerations discussed in the chapter number 6, triple P, triple R, I, double M, F are relevant to the question number 1 as well. Now that question number 1, which is about the risk, especially the risk of material misstatement, and also the business risk which is faced by the business, which leads to the risk of material misstatement, which eventually leads to the audit risk. That question number 1 could be tested by the examiner in 2 ways. Option number 1, examiner is going to utilize very limited financial data, and the examiner is going to utilize loads and loads of background information, discussion of the finance director with the engagement partner, loads and loads of the company's background, their ongoing operations. And as a result of that loads and loads of information, using paragraphs, sentences, words, you will identify and explain business risk. You will identify and explain risk of material misstatements. What's the marking scheme? The marking scheme of the business risk is you will get 2 marks for a well explained business risk. What's the marking scheme for the risk of material misstatement? You will get 2 marks for a normal risk of material misstatement. You will identify an issue, which financial statement items are at risk, understatement or overstatement. You will briefly explain the relevant accounting rule or standard, and you will express your professional skepticism why you think that the client's accounting treatment is wrong or could be wrong. You will get 2 marks out of it. If you are going to utilize materiality, if there is a potential to utilize materiality and have a discussion on materiality, you might be able to get 3 marks. But remember, you won't get marks for the materiality on more than 4 occasions. So in the question number 1, you need to calculate materiality for maximum 4 occasions. You might not be able to calculate even for 4. Maybe the examiner will only provide data for 3 or 2 things. So keep that thing in mind. So the marking scheme for materiality is either the 2 marks or the 3 marks, depending upon materiality. Now, the question number 1, which is relevant to audit risk, can be tested in one other way. If you remember from your AA, there was an auditing standard called ISA 520, which is about analytical procedures. Analytical procedures are comparisons. They are applied in order to understand unusual fluctuations, potential material misstatements, significant relationships between the data. Now, those analytical procedures are applied at 3 different stages of the audit. Number 1 stage, at the planning stage, which is relevant to your question number 1 of AAA. Analytical procedures are applied at the planning stage in order to identify potential material misstatement, unusual fluctuations, discrepancies. Analytical procedures could be applied during the audit as a substantive procedures. Analytical procedures are again applied at the final review stage in order to figure out there is no mismatch, there is no inconsistency between the conclusions drawn by the auditor and the financial statements. Now, among those 3 stages, analytical procedures are mandatory to be applied at the planning stage, and they are mandatory to be applied at the final review stage. During the audit, as a substantive procedures, they are not mandatory. Now, let's focus on the planning stage. Analytical procedures could be applied at the planning stage. Now, what are analytical procedures? It could be a comparison of financial data with the financial with the budget, draft financial statements with the anticipated result, with the industry average, with the competitor, with the last year, with the corresponding period, even the comparison of financial data with the non-financial. So if you are calculating gross profit margin for this year and comparing it with the last year, this is an analytical procedure. If you are calculating the change in revenue and comparing it with the change in the advertising or distribution cost, this is also analytical procedure. Now, if you are wondering what's the difference between the two, the calculation of gross profit is a ratio which you need to compare from the last year. Whereas when you calculated the change in increase in sales or decrease in cost of sales or decrease in advertising cost, that's not a ratio, that's the trend. So the examiner on Monday 6 June could come up with a question such as a Redback Sports Company, which we did on the day 1 of the webinar, in which we were not supposed to apply analytical procedures. We could have applied analytical procedures, but it was not mandatory to apply analytical procedures. And the marking scheme was 2 marks for a plain risk of material misstatement, 3 marks for the risk of material misstatement having materiality. But the examiner could ask you to apply, or the examiner could ask you to identify and explain the risk of material misstatement using analytical procedures. If that is the case, you have got couple of questions in your exam kit such as Eagle Company, Laurel Company, and more. In those questions, the examiner specifically says that you need to apply analytical procedures in order to figure out the risk of material statement. The marking scheme is the same. Which financial statement items, understated, overstated, relevant accounting rule, express your apprehension, express your skeptical attitude, why you think that the client's accounting treatment could be wrong if you're not sure, or if you're sure that the client's accounting treatment is wrong. But considering you are using analytical procedures, you will be seeking help of the ratios and the trends. And remember, you will be calculating ratios for 2 years because you need to compare. Ratios alone stand nowhere. And you will be making certain calculations. You will be trying to figure out the material misstatements by identifying the unusual fluctuations between the data. If this is what the question is, the marking scheme is a bit different one. It's different how it is. Up to 3 marks are available for each audit risk identified and explained. You all know how 3 marks could be obtained. But marks may be awarded for other relevant audit risks not included in the marking guide. Realize this. There is a possibility that some of you might be able to identify and explain a particular audit risk not available in the marking guide. So express your feelings. Don't shy. Don't keep it in your heart. Share it. In addition, 1 mark for relevant ratios and half mark for relevant trend. 1 mark for the ratios. Keep in mind, you have to come up with 2 ratios because you need to compare. So overall 1 mark. Overall 1 mark. The gross profit margin has increased significantly from 13% to 33% if we are going to compare it with the last year. So from 13 to 33, overall this gives you 1 extra mark. And half mark is for the calculation of relevant trends. And those ratios and trends would become part of the analytical review. Now, if you're wondering how many ratios you could calculate, how many trends you could calculate, okay, 5 times if I'm going to calculate ratios, I'll get 5 marks. Half mark is for trend. It means I could calculate 10 trends and I could get 5 marks. According to the examiner, overall the marks for the ratios and trends when combined would not and should not exceed maximum 5 marks. So my dear students, try not to overemphasize on ratios and trends, because you are not going to get many more marks on ratios and trends. Yes, you need to utilize them, but not on a great deal. I mean to say that once you believe that you have utilized 3-4 ratios and 4-5 trends, stop. So a maximum 5 marks is available for the combined ratios and trends. And we all know at last sentence, materiality calculation would be awarded 1 mark with the discussion, and the maximum cap or the maximum threshold for the materiality is a maximum of 4 marks. Is this clear what I just taught you in the last 10 minutes? The second stage of the audit is the execution stage, Amar, where we try to implement the procedures, where we test the controls, where we apply the substantive procedures. Planning stage, execution stage, and then finally the review and reporting stage. I want all of you to participate, please, one more time, one last time. Is this clear? Because right now in the last 10 minutes, I tried to give my best. There are 2 types of audit risk questions. You got to prepare both types of risk questions. Number 1, redback sports type of questions. Number 2, laurel eagle types of questions. You need to prepare both type of questions. Are you clear? Can I have confirmation from all of you? So Ayaz is clear, Amar is clear, Ans is clear, Farah, Nasheed, Daniel, Akhil, most welcome. Almas, thank you very much. You were very much off today, Almas. Okay, Nadeem. Can you confirm name of Eagle case question? In your exam kit, there is a question called Eagle, and there is a question called Laurel, Laurel, and there is a question called Eagle, simply Eagle, Eagle. These two questions are fantastic questions for the sake of preparation of audit risk with respect to analytical procedures. Are you all clear? So if you have got any other, okay guys, Manoj, no problem, the recording will be available. all of you can all of you can those who have missed, a quick word, if there is anyone, out there, if there is anyone who has missed today's session, this is my personal and only number. You can reach me out via WhatsApp, and I will add you in the WhatsApp group, no problem. I will provide all the resources. Otherwise, the resources are already available in the description of the WhatsApp group. Thank you very much, guys. You were really, you were really a good sport. You participated pretty well. I tried my best. I really hope so that my contribution within the last 4 days will end up, will lead to success, and you will enjoy the success not only on Monday, 6 June, but also in the mid of July on the result day. I wish you all the best for your future. I wish you all the best for your, ACCA and all that. Uh, Stay aggressive, stay optimistic. That's what the life, that's what you should spend your life. You don't have to be over ambitious with things. You have to be optimistic, and you need to work harder, and you have to trust the process, and you have to, stay, keep on going, so as you all know, there is a plan post webinar. You got to prepare all those questions which we discussed during the webinar. Once you are done with these questions, I think you need to move towards the those 8 past paper questions. So thank you very much. Stay blessed, work harder, and take care of your family and friends. They are very important. I'll see you somewhere soon, and thank you very much. It was lovely to have you all. Your participation made things a lot easier for me. So thank you very much. Bye bye. Have a you know studious 2 weeks ahead. Best of luck. Bye bye. Thank you very much. Yes, Amar, it was amazing. Thank you very much. Most welcome. Thank you very much. If only I know. Nasheed, no problem. No problem. Stay aggressive. You need to pass this paper. You will. If you are going to work hard, you will. Bye bye. Nasheed, maybe you will be able to refer someone else.